Just before we start the show, here's a quick tip so you'll never miss a live event. Make sure that you click on the subscribe button and then make sure you click on the small bell here. Now you'll be notified instantly when I go live. Hi, very good morning. Welcome to the show. A little bit of a mix-up there this morning. I don't know if you know, saw the counter was counting up from 59 down or 59 up. Good morning, Nordin. You're the first one in. You've beat Juan. Well done, Juan. You're second in this morning. That's not good enough. It's not good enough, Juan. We expect you to be here first. No excuse. Maybe it's because I was a little bit late, just 3 minutes late. Whoops, mic level is too high. Sorry about that. Let me just turn that down. I was messing around yesterday with a mic. Oh, I know what it is. How about that? Can you tell me if that's okay, guys? I had the gain cranked right the way up. Is that okay? Just put a yes in the chat if that's all good. Okay. Better. I can turn it down a little bit more if you like. Just let me know what that's like. It's not showing too high on the... okay, right, lovely. Thank you very much. Sorry about that, guys. I was messing around with a microphone for some other stuff that I'm doing, and I had the gain turned right up, so it was obviously deafening you. Good morning from Cairo. Good morning, Goran. Good morning, Tony. Abukar. Kelly. Good morning. Yeah. Well, you were all in early this morning, straight away. Great. Listen, we've got some good stuff coming up. Has some good stuff on the forum. What I really like about the forum is how you're putting these posts up, you're interacting with each other on them, which is really good. And I read all of those. Make no mistake, I go on and I read all of those. And if I see anything that's wrong or whatever, then of course I will comment straight away. There's a little heart there thing, and I like the ones that if I see ones there that are really like a good answer, I put a little heart on those. You might want to do those. Good morning, Mark. Abu Bakar, okay, so Bakar and Lucy Lou. Right, I do like to pronounce people's names right, hey, they were given to us for a reason to be called. Okay, so, so really good on the forum, and I've got some things this morning that I'm going to go over on there, some posts on there. So the stock placement and in different time frames. There's a post called Ecstasy to Agony. It was an interesting one, that. And then there was one about jump bars, and there was a post about GBP, US dollar, avoiding manipulation. One other thing I've got to, which I'm going to announce, is that I'm going to be making some explainer videos. That's what I was messing around with that audio for yesterday. So basically, these are going to be like whiteboard videos. They're going to be all 5 minutes. So it's going to be 5 minutes, or less than 5 minutes on each one. But it's going to take specifics. I've always trouble with that word, specifics, short tongue. It's going to take specifics of currency trading, and it's going to deal with those in blocks. So it'll be very tightly focused on what it is, and there'll be a library of those that you'll build up. So when we're talking about stop losses and things like that, there will be a particular whiteboard explanation video that's very tightly explained what you can go and do, and then practice on the chart. So I'm looking forward to making those. It's going to be a lot of work, but I really like making that sort of stuff, so I'll be getting on with those. Okay, so without further ado, let us get over. We'll go to the forum first, I think. That will be a good thing. We'll go through those things that I just talked about. So let me just call those up. Let's get over here so you can see me on the forum. There we go. Okay, and what is the first post? Let's have a look and see what is the first one I want to look at. Okay, this is from Wahid. Hopefully you can see that nice and clear. I'm going to open up that nice and big, and I think I can actually open it up even again, and I can't drag that, can I? There we go. How about that? That should be pretty good. You should be able to see that. Good morning, John. Okay, now the question here, let's just go back to the question first off. So sorry, I shouldn't have brought that up full price. So let's just go back. Lost 55 pips on this trade. Is there any way to avoid these manipulation moves? That is a great post, isn't it? Absolutely superb. Let's pull it back up. Is there any way to avoid these moves? Well, first off, let's congratulate on the marking up. Excellent marking up. Look at those contrasting colours. Not a great lover of black myself for a back chart, but a lot of people have that. That's really good marking up, so we can see what's going on here. And we can really get into Wahid's thinking, because by looking at a chart that's marked up, when somebody marks it up, you're looking into their thinking, and that's a great thing, because obviously you can analyse what's going on, and you can help from that, or I can try and help from that. Good morning, Paul. Okay, so you can see Wahid, I hope I'm pronouncing your name right, Wahid. There was stop taking here, which was nicely identified, and I'm going to try and move that. I'll just move that. I can't give you an arrow, but you can see a box moving, so you can roughly see my cursor that I'm pointing to. So stop taking on there, nicely identified. If you look over to the left here, you can see where he had identified that from. So that was good. That was all good from that point on there. Overall, we're looking, I can't zoom back out, but it looks like the downtrend coming through there. Okay. And then a jump bar down. Now, just one thing on jump bars, which I do want to talk about, I've got that on the list to talk about, there's a post about those. When we're looking at Pat software, and this is and look, you know, bear with me on this. This is not a plug that says you have to go off and buy Pat software. I'm just going to explain to you something in the software. Hopefully that you can correlate that through more. But I need to explain that because of the process of a jump bar. In the training course, you will see that I talk about somebody walking up the stairs in a dark room and dropping off the side, and likewise that, and then that changing, the rules changing, and we create a belief that okay, that's what's going to happen, and then we react upon that. Now, with Pat, what it does is when you're looking at that vertical bar and then you're looking at the belief bar, Pat is mapping the beliefs, and what we're looking for is dramatic changes, or we're just looking for the continuation, a steady growth of those beliefs, and we'll see those in a blue or a yellow, and then we see these jump ups or these jump downs. Okay, now when you're looking at a candle bar, and again I know this is sounding like, oh come on, you've got to go and buy Pat, I know this, but I'm not doing it for this. I'm trying to explain to you the process of this. When you're looking at a candle bar, that information, there's that piece of information, that collation of the belief where it's jumped to, it's buried within the bar. So if you look at a candle bar, you have the high and the low, and depending on where it closes, it will show the color of that bar. You know all about those, but you know all about those anyway. But the content of the bar is hidden. You can't really see what's going on, so you're just seeing a big spread on there. You're seeing a big spread, so a big spread might not be a jump bar. So all I'm saying this for is to give you caution that when you just see a big bar on a candle, that you need to look at a lot of other things to confirm whether that was a jump bar or not. Don't just assume that is a jump bar. Okay, so it's just a bit of a pre-warning when we're looking at this chart like this, and for you guys that are looking at candle charts, just take your time. Don't just naturally assume that is a jump bar. Do your research around it to confirm that. Okay, Addy, if you have a question, just put it on there, and I will get to that question in a moment. Okay, so jump bar down, and we'll assume that was a jump bar down. In this case, we will just assume it is. Then you see sold on a retrace, so the retrace is up here. Now, this is what the first thing I'd be cautious about this trade. I'm not saying I wouldn't take this trade, but the first thing I'd be cautious, and that is, if you look back here, this market is still within all this accumulation area. It hasn't really broken away. It hasn't got away. So in other words, we haven't seen a stop take, a run off, in this case it was down, a run off, then a retrace, and then go in. So we haven't seen that continuation move. What we've actually seen is by the time it gets back into the stop take here, sorry, just move that back in. By the time the market gets back to where Wahid sold, it's right back into the accumulation area. And so it's gone back into that area. So it hasn't really come clear of there. So it's really entered into a manipulation area. And then what happens is, so the market comes up, and indeed the market does actually come down a little bit. Looks like stock taking again. Now, he was waiting for confirmation of a jump bar. Now, so what he's gone from here, he's gone from believing the market is going down to now believing the market is going up, okay? But really, the market hasn't really broken out of, if you look at his accumulation, he's marked up beautifully, he's still trading within this area as accumulation, okay? Now, and then if we look at the has stopped out, jump bar, waiting for retrace. Okay, so in a nutshell, what we're seeing here is how Wahid is trading within the same accumulation area. Okay, and again he says, I thought this was selling market, so sold here again, so stopped out. So if you look at all these trades, they're occurring within an accumulation area. He hasn't given it time for these to flow out. Okay, for the market, sorry, to flow out and get into its stream. So let's get off of there. Let's just have a quick look. Tom S, those that can't do teach. Tom S, there's a shitload of videos on me. I do live trading all the time. Loads of it on there. Don't even want to get into it. If you haven't got something to say, go away. Okay, so let's have a look. Let's get back to our charts and go back to hang on there. Okay, so it's gone up. Let's move question, and I want to go ecstasy to agony. Where are you? No. Ecstasy to agony. Okay. Right, this one. Now, this one here is really, really good chart. Look what's happened in here. So if you look at this, general move up, so he's identified general move up. Okay, great. We can see that's good. Identified stop take. That's good. Jump bar up, continuation. He's picked up on that. That's good. Retrace. He's done that. Now, he didn't buy on the retrace down there, but he bought on the GMT here. So he bought on this point. We can see, I think you can see my cursor there. So he bought here. So the market goes on up. And he then bought and stopped out. And then he bought again, exited for plus 18 pips. Okay, so he lost money overall on this. I think that's what he was saying. But look what occurred on this. Notice how that every one of his trades was right. It was correct. So he was going the right way. He was buying the market. He was looking at the retraces and everything else. The only one thing he did when he got to the top here, at this point here, you can see here, he bought the market again, and you can see what happened over to the left here. You can see this could have been a possible stop take, which actually it was at the time. So he bought again here, when really the market, you can see, had come down through this period here. So things had got back into an accumulation area, but he was trying to trade on again. But I think this is, I'm pretty sure that this was ecstasy to agony, and I think this was because, let me just check on this. I hate it when I go quiet like this, but I have to just read this a second. Okay, now I did look at the diary comments. You're not going to be able to see them on there. They're so small on there, okay? But he's saying that he wants to criticise this chart and say where he went wrong. And when you look at this chart, he didn't go wrong. Everything was in order there, right? Timing was a little bit off, and maybe he moved his stops a bit too soon. So, in other words, he was looking to lock in those profits that people talk about. So you've got to lock in the profit. Maybe he did that. I don't know, and I'll look at the notes later on. But you can see how everything was going right. He was doing it right. All the analysis was right, but he managed to lose money. And what I'd say to him is that go back over that and look at why. Take the fact that you were all right, but then look at why you lost money. If you lost money, it was because of really the mechanical way in which you managed the trades, because clearly everything was right on there. There was nothing wrong with that at all. Okay, let's just get on to one more, and then I want to get onto the charts and show you some stuff on the charts this morning. Let's go to here, call up this other one. We've already done that one, ecstasy to agony. Okay, there's one there about 4 hours, but I'm going to talk about that now anyway. So that'll do for that one on there. Now, somebody asked a question, send in a question about 4 hours. So we're here on Pat Charts. What I want to talk about first off this morning, just before we get into that, is I just want to call up, let's just call up this chart here. Now, you can see we've got our Trade Finder tool here. You've got this set up down here. And you can see how the market then retraces back through these points, and again, just here, you can see how the market retraces back through here. And if you go down on this chart, I've got lots of these set up, and you can see how the market retraces back up through here and then gets back into the down. So we've got the overall down, and we have these retrace messages. And we've talked about these a lot, haven't we? We talked about this. Now, normally, those lines that I show you are yellow, so I just change them to white. Or did I? Have a look at the chart very closely and realise that they're actually 90 pip lines. They're not trade finder tools. They're 90 pip lines. So now if you're looking at the time frame, you go to 4 hours, look up in the chart here, you'll see that is a 4 hour chart. Where that's gone. Pull that back up. There we go. Sorry about that. Okay, so you'll see that is a 4 hour chart if you look up there. And what I put this chart up for is to show you something, is to show you how these cycles occur. So when you're looking at the 15-minute chart and the market goes off, does the stop take, starts to move off, goes into the manipulation, goes into a retrace, we look about the 15, 16 pip retrace, then the market starts to go off. Now turn to a 4 hour chart, do exactly the same process but use your 90 pip tool. And what do you find? You find exactly the same process, exactly the same market maker's business model. You're finding the stop take, you're finding the retrace, only in this case you're looking at a 90 pip retrace, which is a cycle that we would take from as a result of our 15 pip trade. We're trading out for that 90. When we're looking at this, you can see how the retraces occur consistently in 90 pips. So all we're looking at is an exact replica of what we do. And this is the beauty of trading this way, because you're not reinventing the wheel. You're not looking for different patterns. You're not looking for different stuff. All you're looking for is the market maker's business model. And you can see so clearly well how the market, by using, in this case, your 90. And all I've done is just zoom out and zoomed in and taken a lot of days. If I actually unzoom this, you can see just how many days we've got. Now we're looking at days, okay? And you go back obviously to your loss, and then you bring it back in, and you can see the same process. Now you could imagine that, if you like, to be a complete day. So get it into your head that this could be a complete day, a complete process. Because why? What are we looking at? We're not looking at a time thing. This is where people get really caught up when they're looking at charts. They focus on time. What we're really looking for is a sequence of events. We're looking for the market maker's content. We're not really looking too much for time. It doesn't really matter that much. So you can go to any time frame and use this. Now think about that. It doesn't matter where you go or what you do. You're only ever looking for the market maker's business model. You're looking for that profit release. Whether that be on a longer time frame or a shorter time frame, that's all you're looking for. Okay? So if you want to trade on a 4 hour chart, fine. If you want to trade on a 45-minute chart, interesting chart, 45 minutes, they're all the same. There's no great panacea to one chart frame. Why do I show a 15-minute chart time frame mostly? Because a lot of you are day traders. It's what you do. You like to be in the market, out of the market, trade for 90 pips. That's what a lot of people do. That's what I did. They're not long-term trades. Then there are other traders who say, I can't trade this because I don't have enough time. Well, go to a 4 hour chart, look for a larger cycle, and trade a 90 pip retrace. Think about that, what I just said. Trade a 90 pip retrace. So how would that work? Well, if you were looking overall and you were looking to trade at this much longer time frame, then here we have a stop take at the top and look for that 90 pip retrace. So let's just get rid of this here. Get rid of this one here. And if you look there is a 90 pip retrace from that there. So if we take that model, take that exact same process there and brought it down to 15, we'd see the same within that. Here's exactly the same process by looking at a 4 hour chart. Now this answers the question, another question I got about placing stops on a longer time frame. This answers it for you, doesn't it, when you think about it, because now you know where to place the stops, because in this case you'd be looking to place them where you'd be selling as the market came back up against this overall trend here at the 90 pips. Okay, as if you were trading this way, you'd be seeing the stop take. You'd be saying, okay, well that's gone against that trend after that stop take. There was the manipulation through there. Took through over a long period of time. That manipulation, a few days. Okay, you've seen that stop take. Market gets down. Pat shows you that nice red there. Market then lifts up, gets the 90 pip, and then the market heads off down. So there's the exact same process, like I said. And I know I'm repeating myself a bit here. It's quite important that you understand this cycle that you're looking for, not the time frame. And then if you were trading this a longer time frame, maybe you're going to trade it out for 3 days. But you can see the market then gets in back down here, and then just if we see, let's have a look. So obviously from there the market then does go down the 90 pips. Then we get another retrace here. Then we get another retrace here, because now we're getting these retraces on this longer time frame, but we're getting them relative to that overall move. And again, we see them down here. Look, see how the market comes here, and then it messes around, gets back up, does the 90 pips move again. So it's all the time doing exactly the same process that goes through. Good morning, Jijan. Okay, 80. Do you know someone to have practiced this method? Yeah, 20 years. It's not a method, you know, this is, I get caught up on this, you know, it's not, it's something I invented. You must understand this. It's not something I suddenly conjured up and thought, oh, this is how I'll create this, and this will be a pattern. It's not something I created. It's something I discovered. I did not invent this. This is not me. I am not a super clever person. It's just something I discovered. I continually mapped it, worked it out, applied some logic to it, developed it into understood what it was to be a market maker's business model, and then put it out there. That's what it is. So it's not something I invented, it's just there. So if you want to test this yourself, just look for the model, test it yourself, and just keep going. Because it doesn't matter what time frame you look at, because time frame is irrelevant. You're looking at a process. Okay, so any more look for any plus or minus. So Danny, okay, so we find the tops and bottoms and look for 90 plus or minus those higher. Okay, finding tops and bottoms, trying to find tops and bottoms of markets is a fool's game. There's more money lost on people trying to find the top and the bottom than anything. Don't try and find the top and bottom. Let the top and bottom be shown to you by the type of a stop taking move after manipulation, and then go on to take your piece out the middle. If you look at what I've just shown you on this chart here, we're looking at here. So we've seen the stop take after all that accumulation running through this period here. Then we have the stop take, then we have the drop down bar, and then we have the 90 pip retrace. So now we've been shown where the top of the market is to a high likelihood. Don't try and guess where it is. Wait for it to occur. Look for the mechanics to come out. So if you're looking at a longer time frame, you say to yourself, right, okay, if that was manipulation and that was a stop take, I'm now on this big time frame. I want to look for this 90 pip retrace. So the 90 pip retrace hasn't even happened. You don't even know it's going to happen. So you're just watching. Then the market starts to turn up. Okay? The market starts to turn up, and now you're looking for this 90 pip retrace. When the market gets up to this 90 pip line, you just got to snap a line on. That's all you have to do, because everything else is lined up. When the market gets back up to the 90 pip line, you're not thinking, right, this is where opportunity I could sell. At this point, go down to your 15-minute chart, look for a tiny sort of retrace from there, and away you go, and you're into the market. And then you can hold that trade over that longer period of time if you want, if you wish on them. And this is what we're going to see in this. I know there was a bit of a, you know, the last video I did where I talked about the pending crash, if you like. You know, this thing is near. We are nearing to this. So look for these longer time frames, if you like. Look for how these things are changing. And I will be looking around that. I can assure you I will be looking as well. So I'll be giving you more and more advice on that as I see things occurring, as I'm looking at things and how the world's changing. And looking at this, I'm looking at the Australian market, I'm looking at Australian banks, I'm looking at the Australian property market. And I'm not looking to trade that as such, but I'm looking at that to give me a very broad, a peripheral vision. You know, we talked about that. It's giving me a peripheral vision by looking at those things. I look at, you know, the debts of a country and that sort of thing. Now, the reason I'm paying more attention to that now, and I would not pay attention to that, I'm not concerned about that while I'm day trading, as it were. I am looking at that in terms of long-term wealth protection, stuff like that, than I am. You know, I've sold everything down, put it that way. I've sold absolutely everything down. I still have some toys, and I still buy stuff, you know, and stuff we don't have to buy, but I've sold everything down. All these big items that I've had, they're all gone. Because there'll be plenty of those around for about 20% of the price that you sell them for. Anyway, okay, so let's look at a couple of questions before we wrap up. Let's have a look. Years ago. Okay, Juan. I talked about the 4-minute, the 4-hour chart was for you. I got that post from you, and you talked about the 2 blue bars. Okay. What you were very cautious about. If you read again what you said to me, you realise that what you were doing, you were going into bar mapping. You were looking for this solution, this 2-bar jump bar. Say, oh, if I see these 2 bars, it means this, and then we can go on from this. You have to take it always as part of the business model. So you're going to, yes, you can look at your 2 blue bars. You can look at those at the start of the day. No problem at all. But it's got to be relative to what has happened historically. So in other words, if you've got a manipulation area, and you're coming out of that, and you're seeing these 2 blue bars, you're going to now pay attention to those, okay? You're not going to just simply say, every morning you look at the 2 blue bars and go from there, because you won't have done any research to back that up. Very important you understand that. So nothing has changed. Nothing has changed that I've been doing for 20 years. Nothing ever changes, okay? I may try and explain things in a different way. I may try and give you a better insight into something, a different way to see something, but nothing ever changes. I am as consistent as the rising sun, not me. The method is consistent as rising the sun because it's the business model of the market makers, okay? Okay, Tony. With trading the 4-hour charts, the advantage is you can leave these trades on longer and be under less pressure. How would you recommend to look for an exit, please, since it's no longer 90 pips? Okay, so if you're going to trade a longer term, good question, Tony. If you're going to trade a longer term on there, you could still exit for those 90 pips, of course, because let's just go back onto the chart. Let's just call that up. You could, of course, exit for the 90 pips after that, but if you're looking for a longer term, then I would be looking for cycles of 3. Okay, that's the first thing that I would be thinking of. So I'd be looking at something like 3 cycles of that, so 3 times 90. That's what I would be looking at. And that's really just down to risk reward. Let's just have a look. Let's just call another one up on there. See, there we go. So 3 times 90. Okay, and you're back into heavy manipulation again through this period here. So that would be a target that I would use. The 3 times, with 90. There's no coincidence here, by the way. You know, when you're looking at 30 pips, 45 pips, sorry, 15 pips, 45 pips, 90 pips. There is no coincidence on that. Do a bit of research on there. And so, yeah, Tony. So I hope that helps. I'd be looking at around that level there to be thinking about taking some profit out of there. And that would give you excellent risk reward, of course, because you'll still be entering. If we just go back to there, if you're using this 90 pips in this to answer here, to relative here, you're not using a 90 pip stop, are you? So you're into your smaller time frame, and your risk reward is, you know, terrific on there. So yeah, by all means, set that up. No worries. Okay, one more from Juan here. Let's have a look. Let's get on there. November 2nd long. Wasn't there an entrance because we were still in accumulation? GBP USD. Let's have a quick look at GBP USD. GBP USD. And the date, November 2nd. November, October, November. November 2nd. Okay, now this is a 4-hour chart. Now what are you asking, Juan? Let me just go back. Was there an entrance because we're still in the accumulation zone? Yep. Well done. You got it. Spotted, sorted, no problem at all. You can see that we're still, so it basically is in a congestion mode, isn't it, through this period here? You can see you've gone up, you've gone down, you've gone up, you're back into there. So I think that answered your question there. So you're looking at the right text. The thing, Juan, that you want to do is get away from the bar, from looking at bars to mean things. It's very important that you get away from that and you look at this as a global thing. You're looking for the market maker's business model at all times, and that's your job, is to keep your mind fixed on that. Not easy, but it's something that you have to do on there. Okay, right, and anyway, Juan, no more questions for you because you were second one in today. You're normally first one in, so no more questions for you. You know, you're slacking on there. Okay, right, well, thanks very much for showing up, guys. I'm going to get on this week with some of these explainer videos for you, where I'll be taking these very small bites in less than 5 minutes. Apparently, I was speaking to somebody who said about the ranking and stuff, by the way, that we do on the stuff, and it's really helpful, apparently, if when we finish this and it goes on to the credits or whatever, and you see at the end, you give the video a thumbs up. Apparently Google likes that sort of stuff. I don't know much about that because I'm not into all that sort of stuff, but apparently give it a thumbs up, and that helps. I don't know if that makes any difference at all. Anyway, so thank you very much for showing up, and I will catch up with you very soon. Have a great week and keep posting on the forum. Take care. And just before we close down, don't forget, make sure you subscribe to the channel and also click on the notification bell.